Well, the headline for today is that global markets have seen very, very sharp cuts. In fact, the Dow was down over 3.5% in trade yesterday. That's the largest single day decline we have seen, and I have to go back all the way till May of 2020 to see a larger decline than that. So clearly a lot of pressure building up, and that kind of reverses all the positive sentiment that came through at the start of this week on Monday and Tuesday. So the Dow clearly seeing cuts. The S&P 500 was down over 4% as well. In fact, there were only 8 constituents of the S&P 500 which were in green yesterday. The Nasdaq too was down 4.75%. That's the biggest fall since 5th of May. So not much of a bad deal for the Nasdaq. It's pretty used to these larger fluctuations, but that's a sharp cut even in the Nasdaq, especially after what we were seeing was a bit of a bounce that we saw in markets since the last couple of days or since the start of this week. But clearly currently all the trends seem lower. And why is this happening? Well, Target and Walmart both US retailers have warned that cost pressures are pushing corporate profits lower as well as impacting consumer demand. So these factors are definitely going to behave as headwinds going forward. Of course, yesterday the Fed did announce and did reiterate that it will do all it can to control inflation. And of course, with rates going up as well as demand being impacted, growth being impacted, there will be a negative sentiment in markets, and that's exactly how it's playing out at the moment. Despite these declines, what we are seeing is all futures are also lower. In fact, US futures are lower. The Dow futures are down around 1/3% as we speak. The S&P 500 futures almost down 0.5% despite that large decline, and the Nasdaq futures down 0.75%. So the sentiment continues to be negative. When we're looking at European markets, the DAX down around 1.25%, more tempered. FTSE down 1+% as well, and the Stock 600 also down 1+%. So clearly the decline is quite secular, and the spillover onto Asia was quite sharp, of course, with the US markets declining sharply. The Nikkei now is down 2.5+% in trade today. The Shanghai is also down almost 1%. The Hang Seng down 3.25%. A real sharp decline seen there, and the ASX and the Kospi both are down over 1.5% in early trade today. So we are seeing declines even across the board in Asia. That's where the spillover has happened. And when we're looking at the SGX Nifty, that's down 2% as well. So sharp cut seen across the board. And let's talk about the larger picture, right? The S&P 500 is now down nearly 19% from its high of 4,818. The Dow is down nearly 15% from its high, and the Nasdaq is down nearly 30% from its high. The question now is definitely going to be for how long will this continue. And before we discuss that a bit more, let's just talk about commodities. Of course, oil is at around $110 a barrel. US refiners have been ramping up production, and that's kind of helping oil prices retreat. Gold is pretty much stable where we left it yesterday, around $1,810 an ounce. Bond yields are at 2.9%. That's the US 10-year bond yield. That's where it's at the moment. Really no change there, even as people take money off equities and put it into bonds. That's broadly the theme at the moment. And with regard to Bitcoin, well, clearly beaten down. Bitcoin is down around 4.5% in early trade today. It's well below that $30,000 mark. It's at, in fact, around the $28,800. Clearly under pressure is where Bitcoin is at. Broadly, we are seeing sharp cuts. There is a negative sentiment, and we do expect a gap down in Indian markets at least today.